The financial world is buzzing with talks of a Fed rate cut. But what exactly is it, and why is the world so obsessed with it? Let's break it down. A Fed rate cut refers to the reduction of the U.S. federal funds rate, basically the interest rate that banks charge each other for overnight loans. In simpler terms, it's the Federal Reserve lowering borrowing costs. The last time the Fed cut rates was back in March 2020, in response to the pandemic. Since then, we've seen multiple rate hikes, with the most recent one in July 2023, pushing rates to a range of 5.25% to 5.5%. But why does this matter? When the Fed cuts rates, it becomes cheaper to borrow money. Consumers spend more on homes, cars, and other big purchases, while businesses invest in new projects and expansions. This ultimately boosts economic growth. It's also a great time for the stock markets. Rate cuts often lead to rallies, as investors anticipate higher corporate profits. Bonds, on the other hand, become less attractive, driving more people into equities. However, savers aren't as lucky. Lower interest rates mean lower returns on savings accounts, CDs, and fixed deposits, which can hurt conservative investors. Rate cuts can also weaken the US dollar, as foreign investors seek better returns in other countries. While a weaker dollar makes US exports more competitive, it also increases the cost of imports. The Fed's goal is to stoke economic growth and push inflation closer to its 2% target. In times of low inflation like now, rate cuts can help stimulate demand. But if inflation is already high, cutting rates could fuel even more spending, potentially worsening the situation. Now let's look at how this impacts India. A Fed rate cut can drive global investors to emerging markets like India, leading to increased capital inflows. This boosts India's stock and bond markets while strengthening the rupee. Cheaper global capital also means lower borrowing costs for Indian businesses, spurring growth. So, in essence, a Fed rate cut is a tool to stimulate the economy, encouraging borrowing, spending, and investment. But like any tool, it comes with trade-offs, both domestically and globally. Thanks for watching Quicfeed. Make sure to subscribe for more insights into global economics and market trends.